Alright everyone, welcome back to another maxed out crypto video. Today we're going to be talking about the $2,000 trading challenge that I am going to be doing over the period of, I calculated to double from 2,000 to 4,000 will take about a year, from 4,000 to 8,000, maybe a little another year. So if that seems too slow for you, maybe this isn't the channel for you. This is going to be slow, safe earnings on this channel. This is not financial advice. I am not a financial advisor, so don't listen to anything I say. If you want quick, lifetime changing money, just go buy a bunch of sheep and just don't listen to me, Anyway, let's move on. So, what we're going to do is we're going to trade with the three techniques that I like to use, that I trade with. And the first technique is probably my favorite and probably the most reliable, at least the less scary. The one where I find levels can be a little scary. Price can jump right into that. Anyway, so this first strategy is what I like to call, I'm going to be using Market Cypher for all the strategies. So this is I guess a Market Cypher video, but if you don't have Market Cypher, you're going to need it to follow my trading. So I'll have a link in the description if you would like to use my affiliate link. Go for it. If not, don't worry about it, but just get Market Cypher. So first strategy is what I like to call the second, what's going on there? The second green dot 4-hour strategy. I guess technically that's not right. It was on this one. Which is where we take, this isn't a divergence, so it wasn't a great one, but it still worked. It's when these momentum waves come down below this zero line, as it's called, and you get a second green dot. So like if this was live, you wouldn't see this, and then a green dot, and then you get a little pump, and then you come down. The second green dot, just enter. When it's starting to flash, or if you want to wait till it's confirmed. So technically it didn't confirm to like this candle. So you would have got still 3% jump. I think I entered the trade. Let's look. Yeah. So I entered the trade here, so it wasn't quite, just getting started. But anyway, so that's the first strategy. Is the second green dot on Market Cypher B on the 4-hour. And I mean, we can do a couple back tests. See here, second green dot. I don't know why I'm drawing these, because these aren't divergences, but I mean, look, they're still working. I mean, when you get a divergence, obviously that's the best. But I still think the second green dot strategy works. This one doesn't really have, I mean, this you could argue, see these little hitches where it looked like it was going to, VWAP was going to come down, but then it went up. That's technically a green dot in my mind. So that would have worked there. See, some of these aren't huge moves, but I mean, that's 4%, with leverage, that's a lot of percent. So right here, second green dot, boom, Down here you don't really get it, you would have missed out. Here is choppy, still would have entered. Got something, came back down, definitely want to enter it on the trigger wave. And then see, you can, once you enter a trade, you can use these dots to add to your trade, Always move stop loss up to entry. But anyway, I'm rambling here, so I'm sorry. So first strategy is the second green dot strategy. That's what we'll be implementing. That's probably the easiest. I mean, this trade that I did, I entered, it was like 12 at night, and I entered, put the stop loss, and didn't even worry about it. Woke up, profit. That is the most confident one, I would say, of the strategies. The second strategy is what I like to call the Jason Casper strategy. If any of you follow Jason Casper, you know this strategy. If you don't, you should follow him and go find out, because he's a TA wizard and he knows Market Cypher much better than me. Been doing it longer. His is you find levels on the chart. So you start, see I already have a lot of them marked out. You you find all these levels: weekly levels, monthly levels, daily levels. Okay, and these levels are levels where price has done this. It's hit a point, the candle's closed, the candle's opened, and immediately reversed. Since we're on the 4 hour, you want to go, you start with the monthly, and you mark these levels. I don't know why those don't want to show up on my monthly. Let's fix that. Sorry folks, just bear with me for a sec. It should be in the settings. Visibility, month. Okay. Can we just do that for all of them? No. Disappointing. Alright, bear with me folks. Bear with me. Losing viewers when I'm fiddling, I can already tell. Anyway, so okay, back to the monthly. See, these are all levels where price is. Oh, we have a new one up here. Look at that. Got a new level. Well, this month hasn't closed. So, oops, technically it's not a level yet. I mean, let's mark it. I mean, we could come down here and shoot all the way up in the next couple days for all we know. Let's get that magnet tool so we get the level exactly. Okay, there we go. So we mark these levels. I like to put the number on it. And these are just levels, you know, that we can create trades on and use Market Cypher along with these levels. I'll show you how Market Cypher interacts with these levels in a moment. Let me just put that in the monthly folder. Alright, so you start with the monthly. You find what price opened, or yeah, opened and then reversed. Right, so there, opened, reversed. This one is sorta, because it kind of, this candle body's in the middle of it. But still, it opened, reversed that way. So those are the monthly levels. Then you do the same thing with the weekly. You get the weekly chart out, and you measure where the price is reversed. I mean, we had a lot of these in May, so there are a lot, but price reversed. These are still decent moves, you know, so don't ignore them. I mean, that's a 14% short, so. And there's just a lot more volume up there. That's why there's more levels and stuff. You could argue this is a level here too that I marked out, but it's so close to this other one. I know these are too, but they just seem more significant because they're up higher and more volume. Anyway, moving on. So you do that, and then you do it with the daily as well. Those are kind of the 3 time frames I like to use to find my levels. See, reverse, reverse. It's a good one. I guess we should add another level. Look at that. Haven't been doing my TA. I got levels missing. So there you go. Daily. What is that? 67,603. And just to keep it neat. Okay. There we go. And we'll put that in the daily folder. I like to keep these folders because it keeps it organized and you don't have a bunch of lines all over your charts. Alright, so now that you have those levels, see? The next thing to do is I like to use volume. This is another Jason Casper trick where you take these fixed volume, because price interacts with these levels quite a bit, and where a lot of volume is traded, it creates these ranges. And we don't move that. And price bounces off, you know, these ranges. So here's the point of control, value area high, value area low, point of control. This is actually a double value area high and low. Low here and high there. And it's just where price, you know, tends to interact and bounce off of. So you mark those. Alright, so then once you have those, the next step is to grab out your Fibonacci tool, and let's go a little shorter time frame, like we're scalping. So here's the 4 hour. So what we do is say, okay, price has been coming down. Where's a good spot for it to bounce? So maybe we take a fib from that level, and we go like that. And it looks like this golden pocket is where it could bounce. So let's see if we have any levels in that golden pocket. No dailies, no monthlies, no weeklies. What about volume? Well, we had a point of control above it. That's kind of where we're bouncing now. So maybe that wasn't a very good fib pull. So let's try another spot. And for those that don't know, this golden pocket is probably the most common bounce retrace on the Fibonacci. So daily, oh look at that, we got a daily at 50. No monthly. Oh look at that, we got a weekly at 51. And what about volume? Nope, no volume in there. So this would be a good place to enter trade because we got 1, 2, 3 values. We got of this Fibonacci move from here to there. We got the golden pocket, and then we got 2 levels. We got daily level, and we got a weekly level right in there. So now that we got that, we mark that out like we're entering it, like we're getting ready for a trade. I usually move it a little above, just so I know the first line of where anything can happen. I like to change it to a different color, like green. Make it a little thicker. Oop, not dashed, we want thicker. Style, where is that? Right there. That's too thick. Okay, there we go. Right there. And then what I do is I say why I'm in the trade, so I can know for reference when I go back to look why I entered the trade. I know. So we have a weekly level at 51,641. Then we have a daily level at 51370. Then we have the golden pocket, which we can't see. So we have a GP golden pocket at 5163 to 5722. Okay, there we go. So now that we have our level, what we would do is set an alert a little ways above the level. Okay, I'm not going to do that now. Let's get rid of this stuff so it looks a little cleaner. Okay, so there's our level. Do we want, let's get rid of the Fibonacci too. So we want price to come down, and what we want when price comes down here is to see divergences on market Cypher. Because when we get divergences, that's when price pumps up, right? Like right here. That's what we want, divergence. Price came to the same level, but momentum was higher right here. Boom, pump. So what we want is using market Cypher, because we don't just set this level and then enter a bunch of limits just hoping it's going to bounce. We want to see the market Cypher divergences for confidence and then bounce. So what we'd want to see is like, so maybe this is going to come up, you know, fizzle around, and then come down, and then come like that, and then whoof. So like that. So then market Cypher would maybe come up here, you know, maybe come back down here, and then it'd really come here, and then up, right? So you would know this would be a good trade, and you'd want to enter because divergence. Price was coming down while momentum was coming up. That would be a high confidence trade right there. All right. So that's one way we trade. It's mark levels and then look for divergences as we're coming to our level. It's the Jason Casper trading technique. So we're dubbing it. Okay. So that's one, but that's the second one. We have the 4-hour green dot, second green dot, and then the marking levels and getting divergences when we come to a level. The next is a little long term, and I've generally only used it for shorts. Maybe because the pumps I'm already in and shorts I usually miss and then get in later. That's probably why. But it's the 6 hour and the 21 EMA. It just seems to work out really well. Okay, so basically you see it right here. So once the 21 EMA, which is ribbon 9 on Market Cypher A, I believe. Oh no, it's ribbon 5. Ribbon 5 on Market Cypher A. I don't use, if you're familiar with Market Cypher, you know it has a bunch more stuff. You know, it's got the blood diamond and red X's, and those just, they distract me. And when I'm in a trade, they make me think more or less or distract me. So I don't have them. I have the yellow X. So the yellow X, it's unique to the Market Cypher, and it seems to be the best Market Cypher A other than the ribbon indicator. So I only use it as confidence. If I'm in a trade and I see that, I might up the leverage and add more to it. It's not really an enter the trade signal for me. It's just kind of an add to it. Anyway, digress. So the 6 hour EMA trading strategy is once you've turned gray, because the nice thing about Market Cypher is once a bear trend kind of starts and it's turned gray, you wait for the back test, and if you get a red dot or you see momentum clipping as you're getting the back test, you enter the trade. And look, so you entered there. Say you even got in, you know, and this red dot started to flash, maybe on this candle. That's a 4% move right there. I mean, this would have scared you, and that was a, you know, that was a stop loss hunter. You would have to be patient. But yeah, but that's the 6 hour. You got to be patient with the 6 hour. It might take a while to play out, but it will play out. Like even here, you get the big red dot, and it confirms down here. It did pump again, but it still came down. So the 6 hour you got to be more patient with, but it always plays out. And you don't see these don't really, I mean, yeah, it's turning gray, but they don't really count as much. See, it's got to have a nice drop like this and then a retest. This one arguably might have entered a short and lost, because this is a pretty good drop here and then a retest, but it's not gray, so wouldn't have entered. Plus you can use other time frames to help build your confidence. But like, let's see, there was a while back, I think it was, I believe it was this one that I entered and used. Let's see if I even have it saved. Doesn't look like it anyway. But yeah, so I mean, any of these you would have got a good move. Just wait, especially these little momentum clips like this. These ones up here, you know, the money flow's green, and I mean, you're not below the EMA. So anyway, so yeah, so the 6 hour EMA retest is the third strategy. And it's mainly for shorting. I mean, you can do it for longs. I just, like I said, usually I'm already in a trade in the longer part from like the 4 hour green dot or the bounces. The shorts I tend to miss because I don't know, I'm just hoping it pumps and I just tend to miss them, you know, like, yeah. So anyway. Those are the two we're going to be using. Now, the next step is when you're in the trade. Now, a lot of people will talk about, you know, entering a trade and trading strategy, but they don't tell you what to do when you're in the trade, which is just as hard as getting into a trade. I mean, it's a little easier. I don't know, I still think it's just as hard as having the confidence to enter a trade is knowing when to get out and stuff. That's why what you do is, okay, so as soon as you entered, so this trade I did, when was that? Last week, November 19th. What was that? Friday. So, see, I even traded over the weekend. That's how confident I was in that. This second green dot on the 4 hour. Is it this one? No. Which one? This one? Yeah. Okay, so what I'd like to do, so I enter the trade, then once I enter the trade, I find my take profits using the Fibonacci tool. and then I just take profits on the Fibonacci. The 382, the most common retrace, not the most common reversal like this one, but the most common retrace where price comes to is the 382. Profits there, profits at the most common reversal, then the 786, and then at the full where I think the trade is going to go right there. And then I don't take it all the way out and let it ride the rest of the way in case it's a big trade. So also what I do is when I end the trade and it makes a 1% move, I usually take 40% out of the trade right away to guarantee a winner. And then usually move my stop loss up to entry. Now, it's different for everyone because sometimes price can come back down and stop you out and just go right back up. A lot of times I'll re-enter there though, just knowing confidence. So that's what you do. So this one, like I said, the 4-hour green dot, second dot, it's a good one. We would have hit 1, 2, 3 take profits. Okay? This is how you do it without, knowing where it's. I mean, I eventually got stopped out, and here we are down here again. But, this would have spooked someone if you didn't just leave the trade and take profits along the way. You would have taken a profit here and here, and you would have been like, oh, it's done. It's, we're over. Close the trade. And you wouldn't have got this third one. So I just wait, put stop loss at entry. The worst you're going to do is come out with a winning trade. Yeah, you won't. Taking your full trade out, up here, you would have made more, but this way it's just less stress-free and you're not fully in, not fully out. That's the way I like to think about it. So yeah. So when we're going to be entering trades, immediately throw these up, enter your take profits, and if you move 1%, take 40% out. Now, so yeah, that's what I like to do. And with this trading challenge that we're going to be doing on this channel is I'm going to be posting the setups. So like say this wasn't here and we had our line here. Oh, where was that line we made earlier? Did we delete it? I don't think so. Did we? We might have. Shit. Well, let's just pretend. Oop, kids channel. Sorry, no shits here. So let's say we found that was a good level. All right, 47. Ooh, that'd scare everybody. Yeah, that would scare everybody, 47. And I said, we wanted this and this. And we wanted this and this. So, this is how I would post it. On my Instagram or on my Twitter. Maxed Out Crypto, go follow me. I'll have links in the description, or my handles in the description. Like that, okay? Post them like that and have this level and you can enter and join in the fun. And basically I'll post when I'm entering, but it's because there'll be divergences, this is coming down and that's coming up. This is very unlikely because there would be a lot more moves in here, but anyway. So that's how I'm going to be posting. So if you want to join along the journey, make some money with me. This is not financial advice. I'm not a financial advisor. Don't listen to me, but if you want to, join me, because this challenge is going to work. We're going to be doubling our money. So let me give a breakdown of how it's actually going to work the numbers, because I feel like a lot of times channels don't talk about actual numbers too. They just talk about trading and making money. They don't really get down to the brass tacks of it. So here is the brass tacks. So we're going to start with $2,000 as our trading capital. We're only going to be, each trade is only going to be 2% of our capital. Alright, so we're only going to be willing to risk $40 of our capital. Alright, this is key risk management. Alright, we don't want to be risking all 2,000 at once because we lose one trade and we're done. Well, if we only risk 40, we can lose 10 trades in a row. And it's only $400. And we still have $1,600 left in the account. Alright, I mean, that wouldn't be great. It would suck to lose 10 trades in a row, but we still have capital. Whereas if you're starting to put 50%, 40% on a trade, you don't know. You could lose it all right away in 3 or 4 trades. This we got, 10. We're not going to, ooh, I shouldn't say that. Knock on wood. Haha. I haven't lost 10 trades in a row. I don't know if ever. I've probably just walked away from the charts before I've done that. anyway, so we can lose up to 10. So I like to use with Bitcoin. There'll probably be a couple altcoin trades, sure, but I like to use 40x leverage with BTC. Okay, it works out. So what 40x leverage does with BTC with 2,000 in your account, I did the math. It puts your stop loss at about 2.5. Oh, fucking magnet tool. Excuse me, kids channel. Oh, let's just delete that. So say we're to enter here, and we're going all-time highs. With 40x leverage and 2,000 in your account, it puts your stop loss, your liquidity, if you only use 2% of your account, about at 2.5%, which gives you a decent leeway, especially if you're finding levels and getting really good entries. 2.5% is enough. Sometimes with the 4-hour green dot, I don't use as much leverage because it can really move around, but often enough I don't. Anyway, so moving on. Oh, shit. So, with 40x leverage, that'll make what we're trading with 1,600. That's how much we're putting on each trade. 40x leverage, so we're only risking 40 with a 1,600 trade. And let's say we only take out, like I said, 40% after a 1% move would be $6.40. So that's like the lowest end range of every trade. BTC, you enter the trade, BTC moves 1%, you take out 40%, there's your profits. $6.50, $6.40, all right? So let's say we enter a trade every other day instead of every day. That's $96 for the month, okay? Which is about a 4.8% gain, so almost a 5% gain. And this is low ball and stuff, okay? I mean, we won't probably be trading 15 days, you know. That's a lot of trading. I mean, sometimes I'm gonna trade every day, sometimes I'm not, sometimes I have stuff going on. Anyway, but not every trade is just gonna be the 1% move. You know, yeah, we'll be taking 40% out when we move up 1% every time, but sometimes we have the trades where we go up more and we're hitting the other take profits, like this one, and we're getting more than $6. We're getting this was probably almost a $20 trade because we're getting more at each level. Nope, that's not what we want. So back to this. So that's how much we gain. So if we compound it out, making close to 5% every month after the first year, we'll have a 76% gain on the account. Okay, that's saying we'll still lose some trades, win some trades, so, and this is with the low ball moving 1%, just 1% and taking 40% of your trade out. So that's a 70% gain in the account. Now you have $1,500 more in your account. And after each month, what you have to make with, or after what you have left, after each month, now you trade with more, because now you have more in your account. So 2% of that is what you trade with now. Then 2% of that is what you trade with. So you're compounding over time. So, and I mean, I know this seems long, but it's not. I mean, maybe this isn't the channel for you if you're looking to make, $500,000 in 4 months. That's just absurd. Okay, I mean, some people think that with crypto, because you can do that if you get lucky. With SHIB, or back a while ago was Doge, before that was Neo, just getting lucky, just buying in and being patient. I mean, that's kind of getting lucky. All right, most people in those SHIBs probably sold at some point. This is just trading, slowly growing your account the smart way. All right, so then in year 2, you've doubled your account in the 3rd month. So 14 months, you have doubled your account. Okay, and then look, year 2, you're making a nice 75% again, and now you've gained over 300% in your account from year 2, and now you're looking at over $6,000 in year 2. Okay? Then year 4, look at that, you doubled your account again. In year 3, sorry, this is year 3. And then by the end of year 3, look at that, you got 5 figures. That looks pretty good. Now, to a lot of people, 3 years may seem like a long time, but it's really not. It's really not. And then by year 4, look at that, you almost doubled it again. Okay? These are just, once again, compounding. Each month, you have a new 2% amount that you can trade with. And you're just making 5%, and you slow 5% a month with winning trades. So this is very conservative. So, basically, if you want to get to the point where you want to day trade every day and that's your income, I figured you double your account every 14 months. So, 14 months, you get to 4,000, 28 months, 8,000, 42 months, 16, so on and so forth till you're here. And I would say this is a point where you could consider becoming a full-time trade trader. That's 7 years, which is a long time, conservative amount, like I said before. But I mean, in the long scheme of things, 7 years isn't that long. I know it seems like a long time, especially if you're younger. I mean, I'm still young, 7 years is a lot for me. But in 7 years from now, if you could tell me I'm day trading all the time, I would be happy in making my income in day trading. I would be happy, Plus, there's, you could make your money quicker if you invested in just directly into Bitcoin. Maybe not right now, because like I said, my first video was the top of Bitcoin. If you haven't seen that, go look at that. That's why we're using USDT pairs. That's why I guess I should clear that up. I probably should have mentioned that earlier. We're going to be, taking our profits in USDT. This is USDT pairs. We're not going to be hodling Bitcoin, not till Bitcoin drops, and then look at all this. You could have, when Bitcoin drops on the next cycle in, 4 years maybe more. Like I said in that previous video, I think where cycles are just getting longer and longer, so maybe it's 7 years. And look at you. In 7 years, you'll have this much more to invest into it. I just wouldn't suggest doing it now because look at this. We are fully extended. Okay? This has got to come down at some point. If we turn off log and turn on the auto, look at that. That's full bubble mode. People can deny it all they want. Bitcoin's in a bubble right now, which means bubbles only do one thing, they come down. So anyway, I digress. So that's why we're doing USDT pairs, okay? So, at 7 years, you'll have 136,000 in your account. And 5% of 136,000 in your account is $6,500 a month. Yeah, that's pretty good. That's pretty good living, okay? So you could continue to day trade, and you could live beyond your means and maybe have another side hustle and still make money the other way, And while you're doing this, you could, while you're in your other job and not day trading as full time, is saving a little money, adding to this, adding to these numbers as you go up. Because there's going to be losing trades. We're not going to win every trade, but this is just all you need is a 5% gain, 4.8% gain every month to, in 7 years, get to this number. Which I'm sorry if that seems like a long time. I mean, it is, but if you could tell yourself now you'll have this much more money in 7 years, and it's not like in a salary that you've spent half of it on whatever, you just have the money, I'm sure you would take that. Maybe not you whales out there that are already day trading, but most of us would. So, alright. So that kind of sums up the trading challenge I'm going to be doing. And yeah, let's go for it. Hey, look, we're getting, that just closed. We got a green dot flashing on BTC. So maybe we enter a little something. Let's see, let's take a look at this. While we got the channel, let's do a little TA in. Alright, so there. This would be a good spot to enter, because our stop loss with 40x leverage would put us below this swing low. And we put it up there, and that's just a 5% move. Let's look at See, we haven't even back tested up here on the daily. Haven't even back tested the 21 EMA on the daily. And we still got money flow. I mean, money flow is coming down. But this hump was still higher than these ones. I mean, this was a definite divergence here, but the money flow wasn't diverging yet. So, like I said, I still think BTC, I still think we got 75,000 Bitcoin, maybe 80,000 Bitcoin, but then that's kind of it. So, I mean, if you want to buy it now, but that's not a big move, look at that. That's a 40% move in crypto, that's not much. So, alright, so anyway, let's digress and end this little video here. And that's the trading challenge. Keep following me. I'll be updating. I'll be sending the trades on Instagram, so go follow me on Instagram, and on Twitter. Follow me on Twitter. I will add links in the description. And let's go get that money together. Alright, buddy. Alright, everybody. Peace out.